this is a pretty good idea to buy up all of Cyber Manhattan before everybody else moves here. And if Bitcoin is appreciating 100% a year, and if I can borrow money at 5% or 1% or 6%, then my arbitrage is going to be 100%, 95%, whatever the number is, right? We can debate. I think Bitcoin went up 130% on average for a decade, and it's up faster this year. So you plug in the number you think it'll be, but let's say we think it's going to go up 110% for the near future. If I can borrow money at 5%, then I'm going to get 105% arbitrage. Why wouldn't you? I think what you're going to see is $100 trillion worth of capital flow out of investment properties in the developed world into Bitcoin, and the currencies, the euro, the dollar will get stronger. The ideal situation you want to get to eventually is I put 100% of my assets into Bitcoin, and then I have a credit card / credit line, which is drawn against which is converted into local currency, and it is drawn against the Bitcoin. So I have $10,000 of Bitcoin and I want to spend $37. So I spend $37 and now I owe $37 against my my 50 million Satoshis. And I never really sell my Bitcoin. I just generated debt against the Bitcoin. And we're a little bit early here, but if your expense ratio is less than your expected appreciation over time, that is to say, if you expect Bitcoin to go up 10% a year, and if you have $1 million in assets and your expenses a year are 50,000, so your expense ratio is 5% a year, and you expect Bitcoin to appreciate at 10% a year. If your expense ratio is less than your expected appreciation over time, you never have to sell anything ever. You can borrow against your assets from now to the end of eternity. Now, it requires that you have a Bitcoin banking sector developed, right? You have to have a credit line against the Bitcoin, and we see that developing in different ways around the world, but ultimately that would be the ideal situation. You would want to have a situation where you're holding Bitcoin and you're drawing credit lines in the currencies that exist. And I think what we'll see is the world will reduce down to 10 currencies or 5, the Chinese currency, the US dollar, the euro, right? The only way currency can exist is for the government to stay viable. And, there's no Afghan currency right now, right? I mean, it's not going to be one of those. So if you're spending anything, what are you going to be spending, right? It'll probably dollarize. If it isn't, it's already dollarized, right? So I think that what we see is a collapse of currencies to a few. And I think you see the collapse of properties to a few, right? Like, for example, there's 100,000 buildings in the US you can buy for the cost of 1 Bitcoin, or you can buy Bitcoin. Which of the two is the easier decision? When I have a hotel, if the hotel had every room booked 365 days a year, I'm obviously squeezing more revenue out of the hotel. But let's do a thought experiment. What if I had 100 rooms in the hotel and every room is booked every night, 365 days a year, and you're charging by the hour? Well, that's interesting. Now, how many hours of the year, how many room hours are actually unoccupied in the hotel, even though the hotel is theoretically booked every room night? Even if 100 people book every room night in the hotel for 365 days, they have to leave the room. They leave to go to work. They leave to go out, to a bar. They leave to commute. And point of fact, the hotel that's fully booked is empty 2/3 of the time. So if I really could book out the room hour by hour, my revenues would triple. So you see where you get. Now, what if I could actually book out the room hour by hour to anybody in any city on earth? What if I could actually move the hotel or teleport the hotel every hour? Well, not only could I drive the occupancy up by a factor of 10, I could also increase the pricing. I could move the hotel to the place in the world that the Venice for the Venice Film Festival, or I can move it to wherever the Super Bowl is. So if I could move the hotel to the place where the room rates are the highest by the hour, my utilization would go up, my price per hour would go up. What if my costs were fixed? Well, now, if you think about it, right, the profitability of a hotel running at 47% occupancy at standard rates in Dallas, Texas is 10%. The profitability of the hotel running at 100% occupancy at standard rates goes to 70%. The profit of the hotel running at 300% occupancy goes to 200%. The profitability of the hotel running at 300% occupancy at the highest marginal rate you can get for a room anywhere on earth at any point in time is going to 3,000% or 30,000%. And so what did I just do? I just dematerialized the property, and I moved it with a frequency which was unimaginable. That's what Bitcoin is, right? That's what happens when you dematerialize property. You have the option to move it with a frequency which is unimaginable to the highest marginal use, right? And when people get their heads around that, you realize that, well, do you want to own a hotel in Texas? No. Do you want to own anything fixed in the real world? No. What do you want to own? You want to own the apex property in cyberspace that's universally desirable to everybody, and then you want to loan it out to them for the number of seconds that they want to use it, and then snatch it back at no cost or 1 Satoshi. And that really is what's interesting about